Good afternoon, ladies and gentlemen, and welcome to the Wentworth Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And now I'd like to hand you over to CEO Catherine Rowe. Good afternoon.
Thank you very much, and good afternoon, everybody, and thank you for taking the time to listen to our presentation this afternoon while we run through some more details around the acquisition that we announced this morning to build on our existing portfolio. I'm joined today by our COO, Aaron LeBlanc, who will be also giving a little bit more detail about the asset itself and the opportunity and how it fits into our overall strategy here at Wentworth. We have the advantage of prior knowledge from Aaron, given the work on this asset over the last 5 years in his previous role at Aminex, and hopefully we'll be able to expand on some of the information we put out into this morning's announcement. Just running through the presentation, this is on our website, so please do revisit for further detail going forward if you need to. Just here as an overview of the transaction and what it means for Wentworth. We are acquiring a 25% non-operated working interest in Rovuma from Sirocco Energy. The Rovuma asset is located adjacent to our existing producing asset, Manazi Bay, and we believe that that is also a world-class asset of the same quality that we enjoy with Manazi Bay. We believe that doing this transaction now will add medium-term production to our portfolio, with first gas expected in late 2024 and an FID expected next year with initial volumes of 140 million cubic feet per day. So we've got some medium production from this asset and very near-term activity when we talk a little bit later about that committed work program that is already underway. And that's really why this is an interesting and exciting opportunity for us to get into right now, with that momentum and activity already tangibly demonstrated on the work program. We've been able to structure the transaction in a very carefully and considered way to ensure that full payout is only achieved on successful field development. There's only an initial $3 million on completion as our initial payment. Further payments for the consideration will only be triggered on certain development and production milestones, and that's deliberate to enable the financial risk from Wentworth's perspective is de-risked and matched and aligned very much with the technical performance of the field. So that's been a very deliberate structure. It's also important to us that we structure this in a way that has not been dilutive for Wentworth shareholders. It is a clean cash acquisition using our existing resources, and really fundamentally for us, it does not impact that committed progressive capital return policy that we have here at Wentworth, and which is really important to us to maintain that fiscal discipline. So we're able to undertake this transaction without impacting that. And ultimately, it gives us that diversified portfolio. We're very fortunate to have a high quality producing asset. We're now adding appraisal and development into our portfolio. So this really transforms us. It is a great next step for the growth of our business. We do think it's transformational. It moves us away from that single asset position to a multi-asset producer and towards that full cycle portfolio that I've just talked about. It will enhance our production profile in the medium and long term, and we'll come on to that in more detail a moment in terms of what that production profile looks like with the addition of this asset. It is a non-operated position, but it's a meaningful stake, and that allows us to have influence and value add into the JV. And we really plan to replicate what we do in Manazi Bay into Rovuma. and really show that we can add value to the JV using our 10-year plus track record, our stakeholder relations, our good knowledge of the above ground commercial environment, and clearly leveraging those stakeholder relationships. That's how we believe we can add value to this license. And we are committed to Tanzania. We've been very clear about that, clear about our strategy. We want to align ourselves with the government as a partner to achieve that universal access. And it's really important that every citizen in Tanzania has access to low-cost, reliable power and electricity. And Rovuma is a really important part of that next step for the country. I'll just move on to this slide, slide 6, which just tries to summarize some of the key parts of the transaction. As I say, Rovuma will become the third producer of domestic gas when it comes on stream, and that's alongside Mnazi Bay and Songa Songa. So Wentworth will have positions in both Mnazi Bay and Rovuma. The consideration structure we'll talk a little bit more in detail on the next slide, but it is funded through existing cash and cash resources. It does not impact our dividend policy. And as I say, a lot of that consideration is deferred and contingent. The operator is Ara Petroleum. Ara Petroleum, an Oman company, and operate assets successfully in Oman. There's a good relationship between Oman and Tanzania, and they have shown commitment and dedication to this work program with the moving forward of the first stage of that, which is the 3D seismic, which we'll talk about. That's really important to us, that it's shown tangible continuity and movement in that work program, and we believe that they'll be a good partner for us to work with going forward. They're also currently paying for 75% of the work program because they are carrying the other 25% partner in the JV, Aminex. And so we believe this reduces the risk of partner preemption, which we'll hopefully know about in the coming few weeks. Just on this slide, just a few things to point out that I haven't possibly mentioned yet. This is a potential big, well understood resource of 1.9 TCF, and it doesn't need. It's very commercial on lower volumes, and again, Aaron will give you more detail about this. But it's very good that we can get in at this stage. We've been interested in Rovuma for several years, and we've been looking at the asset and looking at the right opportunity, the right time to get involved. This feels the right time for us. We've got that early entry into the creaming curve, and we've got significant value realization potential, which we can share for a very minimal amount of consideration, and activity is already underway. So we've got that near-term, that near-term catalyst and near-term activity. And we're able to use our existing cash without compromising on our dividend policy or diluting Wentworth shareholders. It's an attractively priced, accretive transaction, and it's the right time for us to be doing this. Middle column here really just speaks to the structure of the consideration. It is up to $16 million. $16 million in total is payable only in a success case and exceptional performance of the field. It's structured as per those bullets there. $500,000 will be paid shortly, and that is an amount to ensure that Sirocco have sufficient liquidity throughout this period. That will be offset against the completion payment of $3 million. So once we've forwarded the initial loan of $500,000, there'll be a further $2.5 million payable to Sirocco, the seller, on completion. There's a further $3 million on FID, which we expect next year. And then there's up to $8 million of deferred consideration through a minority share of net profit to Wentworth. That share is 25% to Sirocco, 75% to Wentworth. And that is deliberately aligned to ensure that there is financial de-risking for Wentworth, but also allows the seller to benefit in the event that gas is produced. But it's ensuring that we only pay some of that consideration when we get paid for gas sales from this field. And then there's a final further $2 million upon gross cumulative production of 50 BCF, and that's really an outperformance success case for that last piece. The effective date is the 1st of January. There are some conditions to completion, as you would expect. This does require shareholder approval from Sirocco, which is expected to take place on the 29th of June. And it does require partner preemption or a waiver of partner preemption, again, which we expect before the end of the month. The only conditions, therefore, outstanding will be government's approvals. We've been in Tanzania for 10 plus years. We understand the government approval process, and we feel confident about being able to secure those approvals in due course. And we do expect that to happen well before the completion long stop date of the 30th of June 2023. One last point here is that we've entered into a loan arrangement to lend Sirocco their share of cash calls. The work program that's been agreed is a $25 million work program gross, $6.25 million net to Wentworth, and we will lend Sirocco in the interim period to completion the money required for the cash calls. And again, that is deliberate to ensure the work program maintains momentum, maintains continuity, there isn't partner drag, and the activity can move as quickly as possible. We've protected ourselves here at Wentworth for any risk by ensuring there are restricted covenants in that interim period, and we're assigned security over the Rovuma asset. Those drawdowns are also only able to happen once shareholder approval has been given for Sirocco shareholders, and also, as I say, we understand that the partners will not preempt this transaction. So this, for us, is really the next step in that ambition to be a leading onshore nearshore domestic gas producer in Tanzania. And the reason we've been very clear about that strategy is we can't see a better place or a better place for opportunities. This is the industrialization map of Tanzania, which I've shown before, and we really like this because it shows tangible evidence of the country moving towards that industrialization of its economy and really starting to put itself on the map. And these large infrastructure projects are where there's going to be a step change in the demand for natural gas. And that's really the opportunity for us and why we feel excited about committing to Tanzania. And you can see with these projects just how committed Tanzania is to moving forward. And to go alongside that is this slide, which just shows you the landscape of the domestic gas situation onshore. Obviously, the offshore space it has a different set of parameters. This is a small group of us working here for domestic gas, and we've got this new pipeline, as you know, running all the way to Dar es Salaam with plenty of spare capacity. What this transaction does for us is gives us a development and appraisal asset to sit alongside our producing asset. So you can quickly see that we are trying to be the largest holder of acreage on the onshore in Tanzania, with a real goal to getting as much gas produced for the needs of the country as possible. So the other important point, I think, which Aaron will touch on in more detail, is just how close it is to Mnazi Bay and just how important that is for the impact in our local community, the fact that it's well understood, and the fact that there are those only two suppliers of gas into the pipeline in the southern part of the country. So I'll hand over to Aaron to share a little bit more with you and the details around the asset itself.
Great. Thanks, Catherine. Good afternoon, everyone. I'll just jump right into this slide. The Rovuma PSA, if you're looking at the map on the left-hand side, is the square blockish polygon there colored in orange. And you can see Mnazi Bay is colored in yellow. The distance in between those two licenses is approximately 10 kilometers. So it was a natural progression for Wentworth to move to something that's very well understood, producing. We know the reservoir, we know the geology, we know how to get gas to market. So moving into a block that's right next door really made sense to us. Both blocks lie in the Rovuma Basin, very prolific basin. 57 TCF of recoverable resource has been discovered in the offshore, awaiting negotiations with the government for LNG projects that will primarily be for export, aiming at the export. All of this onshore gas is aiming for onshore consumption, mainly from industrial users, as Catherine was mentioning before, and for power generation. The Rovuma block itself has been very lightly explored, but with those few wells that have been drilled, there's been a very high success rate, and that really speaks to the geology and the environment. The petroleum system here is very rich, very prolific, gas rich. We haven't seen oil yet. There is the potential for oil, but probably not in the Notoria discovery itself. Maybe elsewhere. On the block, there's been 2 wells that have been drilled. The Notoria 1 well, drilled in 2012. It tested at 20 million cubic feet per day on an absolute open flow, so it was wide open. And then in 2017, or at least completed in 2017, the Notoria 2 well was drilled, which tested at 17 million cubic feet per day at a stabilized rate, so a proper test. The Chukumbi 1 well is planned to be drilled at the end of this year following Tanzania's first 3D seismic program. And if you look at the orange polygon there, the Rovuma block, you can see the outline of that 3D program. It's underway already. It is about 338 square kilometers on the surface. And then obviously from that, you'll have a little bit of a reduced area that will have full image capacity over the field itself. The partners on the block, Catherine has touched on this already. ARA is the operator with 50%. Daminex has 25% through their subsidiary, which is Endova Resources, and Wentworth have post-completion 25% interest in the block as well. It's worth mentioning that the TPDC, which is the NOC or the state, can elect to back in for up to 25% in a development phase. As far as resources, RPS has audited these resources. The last time that was done was in 2018 for Aminex, and you can find the data or that CPR on their website. There's 1.9 TCF mean GIP assigned to that field, 763 BCF of 2C. The field itself, with the development plan that's in place, first gas is expected in 2024, with the capacity of moving up to 140 million cubic feet per day with the current development plan, or the current plans. Obviously, after the work program's been completed here, the JV will have to make a decision on final investment, and then move in and apply for a 25-year development license, which will dictate the number of wells and the full field development plan itself. It's worth mentioning that gas from this discovery will flow via pipeline approximately 30 kilometers to the Mdimba gas processing facility, which lies within the Mnazi Bay license. The facility itself has a capacity of 210 million cubic feet per day, and there is capacity, as far as we understand. There's the ability for it to be expanded by another, up to another 140 million cubic feet per day. We don't see any difficulties right now in having that facility take all the gas from Notoria, at least in the interim. And any exploration that happens in Mnazi Bay, obviously there's other offtake options there as well, right? As far as the work commitment, it's a $25 million program for the drilling and the seismic, 6.25 million net to Wentworth. That covers seismic and drilling. And we expect, as I mentioned before, seismic to complete sometime late this year, and followed by a well, the Chukumbi 1 well, and first gas expected in 2024. I like this slide here. Really what it shows is our interpretation of the depositional system. On the left-hand side, you can see a block diagram, which is targeting a slope channel system. You can see the Notoria 1 well, where it penetrated on the flank of that channel, Notoria 2 further into the channel, and the Chukumbi 1 well is really targeting the axis of that channel system. And what we've noted and gives the JV confidence is that The Notoria-1 well on the flank, we encountered 25 meters of gross reservoir section. Notoria-2, moving 1.5 kilometers further into that system, encountered 51 meters of gross reservoir section. And now moving further in to the axis, really into the heart of that reservoir system, there's potential for a very thick reservoir section to be encountered by the Chikumbi-1 well. It's worth mentioning that this system itself is very sand rich. So there's a high net to gross and lots of stacked reservoirs. So even if you have a portion of the reservoir that's non-productive, there's a good chance that other parts of it will, and you have good interconnectivity throughout the entire thing, meaning that you need fewer wells than more to develop this field. But really, a lot of this will be further de-risked, and that's the reason for this, the way our deal is structured. With Scirocco, it will be further de-risked with the seismic and the upcoming well. This slide shows what full field development will do for Wentworth itself. On the upper left-hand side or corner of that slide, you can see existing production. This is on a working interest basis. You can see Manazi Bay's producing net to Wentworth just under 30 million cubic feet per day. And in a success case, as we have modeled and the economics are associated with that, Notoria production is shown in yellow on top of the Manazi Bay production, bringing up net production close to 60 million a day for Wentworth. What this doesn't show, and would be additional to this, is any type of exploration, which we're currently looking at right now. So obviously, a very attractive deal for Wentworth. NPV 28.7 million, NPV 10, 25% rate of return, and payback in 5 years. And it's worth noting that those economics represent or take into account the full payment of considerations to Scirocco. So that's in a full success case, those economics. On the right-hand side of the slide, you can see everything to the right of Manazi Bay. That's all new that comes with this deal. In addition to the 135 BCF of 2P reserves that the company already has. It brings in 191 BCF of 2C resource, and then there is prospective resource, and that's held mainly in the Jurassic prospect, which lies underneath Notoria. So it's separate and different, and we'll see when that gets explored, but there is somewhere in the region of 900 BCF of prospective resource in that which accounts for 234 BCF net to Wentworth on a working interest basis. With the addition of Rovuma, you can see we'll have a busy time ahead of us. Lots of news flow, lots of activity, everything that we really like. You can see the seismic program completing sometime end of 2022, followed by the drilling of Chikumbi-1. Now, Chikumbi-1, it would make sense for it to be moved if it needs to, or just optimized slightly based on the seismic. It's good use of money, so we have no issue with that at all. And then ongoing, and what has already been started, is negotiations on some of the gas terms, and we hope to have a final investment decision sometime in 2023 and the award of a 25-year development license, similar to what we have in Manazi Bay. First gas, the operator indicates that we are looking at the end of 2024 for first gas. That will include, that will be after completion of building a pipeline to connect into the Madimba facility. In the Manazi Bay JV, we're currently we have ongoing construction or planning, or not construction yet, but tendering for the compression project. We expect to have that completed and on stream early 2024, first quarter. We're looking at the exploration portfolio right now. There's some interesting bits in there, and we hope to update the market further on that. But depending on the results of that exploration work and that subsurface work, we could see some drilling in the future, which would be very exciting for Wentworth. Catherine, I'll hand over to you.
Okay, well, thank you very much, Aaron. That's really helpful. And I just, I'm going to finish up here, I think, shortly. we're really excited about this asset for all the reasons that Aaron's just talked about, and sitting alongside a lot of that Manasseh Bay exploration piece as well that is actively underway at the moment. But we do feel that that's just a couple of steps in our whole ambition to build this full cycle portfolio, and we're using our wonderful existing asset to actually build on that, as you can see, and this is where we'd like to take the business going forward. So for us, this is a great transaction. It's very compelling on the economics, as we've talked about, but it also represents the next step for us in that wider strategy of growth. This is a slide we've taken from our year-end results, just to remind everybody of the strong and robust fundamentals that we have here at Wentworth, and that allows us the benefit to take advantage of an acquisition like this in a very non-dilutive and accretive way. We do think that natural gas will be an absolute critical resource for the country as the country looks to develop and industrialize further, and we're well positioned to be able to meet that demand with the supply from Manasseh Bay and Rovuma. And we've got a track record. We've got a really strong track record in Tanzania, where we have demonstrated safe, low-cost operations, healthy working relationship with the government, and all of those stakeholder relations are where we can really leverage the ability to move the company forward, starting with this acquisition. Again, it's just really important to us that whatever we did next was in line with our sustainability strategy. As you know, we've worked very hard on this over the last few years, and we have a very strict focus on our low emissions profile. We are fortunate with our low emissions. We are one of, if not the lowest emissions profile E&P in the London listed space, and it's important that we maintain that. So it is key for us that this additional asset is also aligned with the work that we do in Manasseh Bay, and specifically with the carbon offset projects that we're working with Vitol on in Mtwara will also help with Rovuma. It's in the same region, it's right next door to Manasseh Bay. It allows us to benefit the whole community with both assets, and that's really important to us. So that work will continue going forward in line with what we've announced today. So I think just as a summary, we are trying to build the leading domestic gas player in Tanzania, and this asset acquisition today gives us exposure into two assets, as you saw from that previous map, both from a production and also from an appraisal and development perspective. And we've been able to structure it in a way that's very accretive to us. It's a large potential world-class asset that we think we can really develop in the medium term. As Aaron says, there's some very near-term activity, and that really allows us to build that long-term production profile that we've talked about. And it's a diversification of our existing asset. I think it's really important that we move away from that single asset position into having two assets and looking for further. And also, whilst all of this, being able to continue that progressive capital return policy with a healthy dividend of around 7-8%, which is something very differentiating for a small company in this space. So we're very proud that we're able to structure a transaction that's so accretive, whilst also returning that capital to shareholders. So lots coming, lots of activity in the near term. We'll be sharing that as we go forward with the market. We also hope to complete this transaction in the near term, and again, we'll be keeping you updated through those milestones over the next few weeks and months here. But that's how we'd like to provide a good summary for today. And happy to move to Q&A.
Catherine, Aaron, thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while Catherine and Aaron take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Aaron, Catherine, as you can see, we have received a number of questions throughout today's presentation, and thank you to all the investors for submitting their questions. questions. If I could please just hand back to you to run through that Q&A tab, and where it's appropriate to do so, if you could please just read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Great. Okay, thank you. And again, thank you everybody for taking the time to listen and for your questions. So the first question we have is, will the current gas treating plant have sufficient processing capacity to handle the gas from Rovuma? And in addition to the gas from Manazi Bay, how will this additional volume affect the need for compression? We may have addressed this. I think Aaron mentioned that there will need to be the construction of a small pipeline to Madimba. Madimba is the gas processing facility that sits within Manazi Bay. That has current capacity of 210 million cubic feet per day, but we believe there's relatively easy way to extend that for 2 trains of 70 million each when required. So we think that there is spare capacity today, and that will certainly be sufficient for the medium term. I think we also touched on compression, unless you want to add anything, Aaron, on that.
No, that's right. It won't have any effect on compression for Manazi Bay. Manazi Bay's standalone. The gas from Manazi Bay flows into the Badibba plant, and then up through the pipeline, which still has 600 million cubic feet per day of capacity. So lots of ullage in that system to take all the gas we can really throw at it.
Yeah, and that compression project is already underway as well in Manazi Bay, Aaron, as you mentioned, on that activity planner. So the next question was, how will rapid increase in gas prices worldwide impact our business and the impact of the strong dollar? I think the way we answer this is, this is gas for domestic use in a developing country. So it's really important that the government of Tanzania can continue to deliver low-cost, reliable power to its people, even in a rising fuel price environment. So we have a fixed gas price, and that's important to us from a sustainability perspective, because if we went to the government now with a higher gas price outside of our contract, it just wouldn't be affordable for them. What matters to us is that we have a low cost of operation, we have a healthy margin, whilst being able to deliver a gas price that works for the government. And so we do see inflationary upside on that gas price. It is linked to US CPI, so we do get an inflationary rise every year. Obviously, what we're seeing with high inflation this year, that will impact us for the positive on our gas price for next year. But it is a fixed gas price as per our contract, and that will continue. And that's important to us, and we see that being replicated in Rovuma with similar terms. In terms of the dollar, we're paid in US dollars. That will continue, and that will just continue, and repatriate our funds as we have done for many years now. So I think that addresses that. Thank you. The next question is, are there any local regulatory hoops to go through for the transaction to complete? Yes, there are government approvals that are required. They're well understood to us. We know the landscape very well in Tanzania in terms of the government approvals. So we feel fairly comfortable about what needs to be done. We feel confident about getting those approvals. We've got very good political capital in country, and I think we'll be able to demonstrate tangibly that we get support for this transaction, and we get support in a timely way. So yes, we hope to complete as soon as we possibly can, but whilst going through those approval process. The last question I have here is there an ambition in due course to become an operator? And if so, what timescales? So I'll give you my view, and Aaron, you can maybe give your view. Absolutely, yes, there is an ambition to be operator. We would love to be in an operating position. As I may have mentioned at the beginning, we do benefit from a degree of influence in Manazi Bay, which we hope to replicate in Rovuma. We have very, very good partner relationships that we can ensure our contribution in terms of a commercial and technical aspect are taken seriously. But it's also nice to be operator and completely in charge of our own destiny. So we will always keep an eye on opportunities to operate exciting assets if they become available. Aaron, you?
Yeah, absolutely. I mean, just reiterate what Catherine said. It is our ambition. We'll be good at it. We have all the experience and everyone waiting there for the right opportunity. So the sooner it comes, the better. We're just taking the first steps towards diversification and that path right now. Yeah.
Great. So I think that was all the questions that had been put together.
Absolutely. Catherine, I will just leave it a minute just to see if any more come through. But if not, Catherine, Aaron, thank you very much indeed for being so generous with your time there and addressing all of those questions that came through from investors this afternoon. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended for your review. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Catherine, perhaps for redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Great, thank you, and thank you for listening and taking the time. I know how busy everybody is, but this is a really exciting opportunity for us, and we are available to take questions at any point. But I think it's an exciting time coming up for Wentworth and our news flow, and we look forward to talking more about things as we move forward. So thanks again, and have a good rest of the day, everybody.
That's great. Catherine, Aaron, thank you very much indeed for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Wentworth Resources PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.
Everyone.